All right, let's jump right in. Today, we're digging into the earnings of one single company that might just hold the key to one of the biggest questions out there right now. Is this whole AI revolution for real, or are we just living in another tech bubble? That company is TSMC. And believe me, their numbers tell one heck of a story. This is the question on literally every investor's mind, every tech innovator's mind. If you get this right, you could ride one of the biggest waves of our generation. But if you get it wrong, well, you could get caught in a pretty massive collapse. The stakes are incredibly high. And the answer, or at least the biggest clue, lies with the Taiwan Semiconductor Manufacturing Company. You know them as TSMC. So why them? Simple. They build the insanely complex chips that power the entire AI industry. Their financial health is basically a real-time report card for the AI boom itself. So let's dive into the numbers, shall we? Okay, so on October 16th, TSMC dropped their Q3 results. And what they showed us was the clearest, most concrete proof yet of just how massive this AI boom really is. We can forget all the hype and headlines for a second. Let's just look at the cold, hard data. First up, revenue. A 30.3% jump year over year. I mean, come on. In this economy, that's not just good growth, that's an absolute explosion. And it's being fueled by one thing and one thing only: the completely insatiable demand for AI. But this is the number that really sent shockwaves through the market. A 39.1% surge in net profit. That's not just good, that is a massive signal that the demand for their most advanced, highest margin products, yep, the AI chips, is completely off the charts. And it's not just about how much they're selling, it's about how profitable each sale is. A gross margin of nearly 60%, that is almost unheard of for a company this size. This tells us two critical things. One, they are absolute masters of manufacturing. And two, they have near total pricing power. Their customers need what they have, and frankly, there's nowhere else to go. And hey, don't just take my word for it. Even TSMC's own CEO, C.C. Wei, seemed a little surprised by it all. When the CEO says demand is even stronger than they expected just a few months ago, you know this isn't some manufactured hype. The demand is real, and it's accelerating faster than anyone thought. And as we're about to see, this has completely reshaped their entire business. Just take a look at this breakdown. The AI and high-performance computing slice of the pie is now a whopping 60% of their total revenue. Just a few years ago, smartphones were king. Now, they're a distant second. This isn't some temporary blip on the radar. This is a seismic shift. AI is officially the engine driving this entire company forward. So the numbers are clearly showing explosive growth. But why? Why is TSMC the company at the dead center of all this? Well, the answer comes down to their technological dominance. They have a near monopoly on the one thing every single AI company has to have. This chart says it all, really. Almost 3/4 of their revenue comes from their most advanced chips. We're talking about the ones smaller than 7 nanometers. Now, to put that into perspective, that's circuits with features thousands of times thinner than a human hair. This is the cutting-edge tech you absolutely need to run those massive AI models. And right now, TSMC is the only game in town that can produce them reliably and at scale. But it's not just about making the individual chips. It's about how you put all the pieces together. And this is TSMC's secret sauce, a technology called CoWoS. The easiest way to think about it is like the ultimate high-tech packaging, where you can cram processors and super fast memory right next to each other to create these incredibly powerful GPUs that companies like NVIDIA need. And here is the most critical takeaway. The demand for this CoWoS packaging is so extreme that even TSMC can't keep up. It has become the single biggest bottleneck in the entire global AI supply chain. This gives TSMC an incredible amount of power because they effectively get to decide who gets the most advanced AI chips and when. So we've got this picture of incredible demand, untouchable technology, and massive, massive profits. It sounds perfect, right? But the big question is, can it last? Because when you look out on the horizon, there are 3 pretty significant risks that could challenge this incredible momentum. First, you've got the ongoing geopolitical chess match between the US and China, with TSMC stuck right in the middle. Second, this big push to build factories around the world, well, it comes with a very hefty price tag. And third, there's always the risk of becoming too dependent on a single white-hot industry. Let's break these down real quick. So to deal with all the geopolitical risk, TSMC is building new factories, or fabs, in places like Arizona. But as you can see from this table, that security is expensive. It costs at least 30% more to make a chip in the US than it does in Taiwan. And that extra cost is going to directly squeeze those amazing profit margins over the next few years. So you take all this information, the incredible growth, the big risks. How should we think about what's next? It really comes down to a debate between two competing stories about the future. You've got the bull case and you've got the bear case. The bull case, the optimistic view, argues that this is not a bubble. This is a genuine fundamental shift in technology. You've got the CEO himself saying demand is real and getting stronger. The company raised its own growth forecast, and the biggest cloud companies on the planet are pouring billions into the space for the long haul. The bulls are saying this is just the beginning. But then you've got the bears, and they're urging caution. They're pointing to history. I mean, having 60% of your business tied up in one hot sector is a huge risk. We've seen this movie before, right? The dot-com crash, the crypto mining bust, they all started with these periods of intense hype, which were followed by a very painful reality check. Plus, you've got competitors like Intel and Samsung spending billions to try and catch up. TSMC's dominance isn't going to go unchallenged forever. So where does that leave us? We've seen the unbelievable numbers, the technological moat, the risks, and the two very different stories about the future. So what's the final verdict here? Well, I think TSMC's results prove, without any doubt, that the AI boom is 100% real today, right now. The demand is massive, the spending is real, and the profits are huge. But the central question, the multi-trillion-dollar question, is whether this level of investment is actually sustainable in the long run. So, to help you decide for yourself, here are the key signals you should be watching. First, can TSMC actually build out its CoWoS capacity to meet all this demand? Second, do the big cloud guys, Microsoft, Google, Amazon, keep spending at these crazy levels? Third, can TSMC successfully launch their next-generation 2-nanometer chips? And finally, what are their competitors doing and how do those geopolitical tensions play out? These are the real indicators that will tell us the true future of the AI boom. That's everything for this one. Thank you so much for watching.